Vodafone Idea, once worth nothing, now the most traded stock on the Indian market. Government owns it. Billions in debt. And yet retail investors are pouring money in. Is this India's biggest turnaround story? Or its biggest trap? Let's break it down. As of late April 2026, Vodafone Idea, ticker Idea, trades around 9 to 9.50 rupees on the NSE. The stock has traded in a 52-week range between 6.12 and 12.80 rupees, with a market capitalization of around 1.03 lakh crore rupees. That's down roughly 55% over the past year from a 52-week high near 19 rupees in April 2025. So why is everyone still talking about this stock? Here's the part most people don't fully understand. The Indian government acquired close to a 49% stake in Vodafone Idea by converting AGR dues and spectrum charges into equity, making it the single largest shareholder. The Aditya Birla Group retains around 14%, while Vodafone plc's original stake has been heavily diluted. That means, for the first time, the Indian government has direct skin in the game. And that changes the entire risk calculation. Now here's the headline that moved the stock in 2026. The Union Cabinet slashed Vodafone Idea's AGR liability by about 27%, down to 64,046 crore rupees, and granted a 5-year moratorium on payments. The repayment structure is spread out massively. A small annual payment of around 124 crore rupees continues from 2026 to 2031. 4 older dues, then a minimum payment kicks in from 2032. And the bulk of the remaining dues, about 10,608 crore rupees per year, is only due between 2036 and 2041. This had a real accounting impact too. The company posted a net exceptional gain of 57,491 crore rupees for the quarter ended March 2026, largely because of this AGR reduction. On the day the news broke, Vodafone Idea shares jumped over 6%, opening at 9 rupees and touching an intraday high near 9.24 rupees. It's not just paperwork relief either. In February 2026, Vodafone Idea added net subscribers for the first time in over 5 years, gaining nearly 22,000 users, compared to losing over 4 lakh subscribers the month before. Small number? Yes. But after years of pure subscriber bleed, even a flat line is significant. So why might someone buy this stock? First, promoter confidence. The Aditya Birla Group has committed a $500 million equity infusion as part of the company's fundraising effort to fund its 5G rollout and 4G network expansion. Second, analyst targets. HDFC Securities recommended a buy on dips between 8 and 9 rupees, with a fair value target of 12 rupees, calling it a high risk, high reward entry point given the AGR relief and expected tariff hikes. Third, broader analyst range. Consensus targets for 2026 range between 12 and 14 rupees in a bull case, assuming successful debt fundraising and continued ARPU improvement. Now the reality check. As of the third quarter of fiscal year 2026, Vodafone Idea had spent only 6,450 crore rupees out of its planned 50,000 to 55,000 crore rupee capex, way behind schedule. And every quarter of delayed network investment means more subscriber losses too. Jio and Airtel. The fundraising story has also been a recurring disappointment. Debt raises have been repeatedly delayed because banks remain reluctant to lend, without full clarity on AGR, dues and government backing. And don't forget the history of volatility. Just months earlier, in August 2025, the stock crashed over 9% in a single session, after the government clarified that no additional AGR relief was being considered. At the time, falling to around 6.7 rupees, taking its market cap down to roughly 71,915 crore rupees. The bottom line from analysts is blunt. VI is described as a high-risk turnaround story, not a stable telecom compounder. Its valuation is still driven largely by speculation, rather than fundamentals, with downside risk potentially taking it back to the 7 to 8 rupee range. So, invest or not? Here's the honest answer. This is not a set and forget stock. It's a binary, news-driven bet on government policy, debt resolution, and tariff hikes. Every Supreme Court ruling and every Department of Telecom announcement has historically triggered sharp price swings. And that volatility isn't going away anytime soon. If you believe India's government won't let its third largest telecom operator collapse, and that tariff hikes plus the Birla Group's fresh capital can stabilize the balance sheet, there's a case for a small, speculative position. But if you're looking for a stable long-term holding, the fundamentals simply aren't there yet. This is one of the most watched penny stock stories in Indian markets right now. And the next big trigger could be just one government announcement away. Subscribe so you don't miss the next update, because with Vodafone Idea, the next headline could move this stock 10% in a single day. This video is for educational purposes only and is not financial advice. Please consult a SEBI-registered financial advisor before making investment decisions. Stock prices and figures mentioned are as reported in news sources around April to May 2026 and may have changed.